Hi, David Bassanese here, Chief Economist at BetaShares. This is a snapshot of my latest market trends report. And just reviewing the month of October, it was a pretty positive month for equities. The MSCI All Country World Index returning 6.3% in the month. The Aussie dollar was a little bit weaker in the month, so in Aussie dollar terms, it was actually up 6.9%. Bonds were flat, so global bonds basically flat. And some, I guess, good news here, or light at the end of the tunnel with regard to interest rates potentially, is that global bond yields didn't rise a lot more further in October, which helped support the equity market. And really, I think there were two key themes in the month. Firstly, hopes again of a Fed pivot or increased talk of, yes, the Fed is likely to raise rates by 75 points in November, but may then scale that back down to 50 points in December. And that led to some market excitement about, yet another Fed pivot. And I think the other factor has been that the Q3 US earnings reporting season, again, as we've seen so far this year, turning out not as bad as feared, and so some heart that corporate earnings are holding up. Now, the only problem with that, of course, is that strong corporate earnings is part of a strong and still fairly resilient US economy, which the Fed is actually trying to counter by raising interest rates because it does want to slow the economy and get inflation down. So these reports of strong earnings and economic resilience generally, the markets are sort of unsure how to take it, because on the one hand, it's good news the economy is not yet tipping into recession, but on the other hand, it does mean the Fed has probably got more work to do in terms of raising rates. And we've just seen recently with the November meeting of the Fed that, yes, they did raise rates by 75 points in November. There's some hint that they will scale that back to maybe 50 in December. But Jerome Powell, the Fed chair, was very keen to emphasize that they're still looking like raising rates through into next year. And the peak level of the Fed funds rate could even be 5% or more. So the markets just recently have taken that somewhat negatively, and so hopes of a Fed pivot have been dashed in the first few days of the new month of November. That's pretty much it for now. If you'd like to see more details of the market trends report, please visit the insights section of our website. Thanks for watching, and I'll see you again next month.